Hey guys, what's up? So in this video, I'm going to be telling you guys the 5 things you need to know as a beginner Forex trader, or the 5 things that I wish I knew when I started Forex. In case you're joining me for the first time, I'm my friend Grace. Welcome to the channel, and if you're a returning subscriber, thank you for your support. Without any further ado, let's get straight into the video. The first off will be strategy. A strategy will determine whether or not you'll be profitable in the market in the long run. A strategy simply means you understanding when you are to enter the market and when you're to leave the market, and you understanding the whole general picture the market is trying to present to you. I would always advise that whenever you're picking a strategy, you should always do a back test with at least 6 to a year's worth of data, because that will determine whether that particular strategy you picked is profitable in the long run or not. You don't need to hop on from one strategy to another, because whenever you're picking a strategy, make sure that the person you're picking the strategy from has already backtested that strategy and has seen that the strategy is profitable in the long run, so that you can pick the strategy yourself, then backtest it. Go through the datas on the charts, go through all of the datas and ensure that truly that particular strategy is profitable. After you've selected a strategy that you want, you've backtested it, you've seen it's profitable, the next thing is actually applying risk management to that strategy, because even with a good strategy, if you have poor risk management, you risk losing your account or blowing your account. Risk management can simply be defined as the amount you are willing to risk on a trade. That is the amount you're willing to lose on a trade if it goes against you. Applying risk management to your strategy is a very good approach in order to become profitable in the long run. Specifically for larger account size, the risk management are usually ranged from 0.5% to 2%. Depending on your account size, there are various tools out there that you can use to calculate risks, to know exactly how much you're going to be putting into a trade or how much you're going to be risking into a trade. In future videos, I'm going to be showing you guys the tools that you can use to manage your risks properly. If you don't want to miss that video, ensure you hit the like button and subscribe to the channel. Also turn on post notifications so that whenever I upload that videos, you're going to get notified and you're going to learn from it. Now, after you've chosen the right strategy, you've applied proper risk management, the next thing on the list is psychology. What is psychology? Psychology could simply be defined as how much patience and discipline you have. That could be in relation to waiting for your setups to get to you, waiting for your confirmations, waiting for your setups to come up, waiting for your trades after activation to go the direction you're supposed to go. Unfortunately, psychology is not something that can be taught. It is an experience that you gain over time. This is one problem with beginner traders, because they tend to always be in a haste. They tend to not be disciplined enough. They tend to take setups and take trades that goes against their strategy, that goes against their setups, that goes against their rules. So psychology is basically what keeps a trader intact, to know, to be patient, to be disciplined enough to wait for your setups to occur, and if it doesn't occur, to move away from the markets. The next on the list now is fundamentals. Fundamentals is simply news events that occurs in the markets, which makes the markets more volatile or less volatile in some cases. That is, it could either go in a direction in favor of your trade, or it could go in a direction against your trade. It's usually advised for traders, especially beginners, to avoid fundamentals, although fundamentals may be tempting to new traders because of how much they can make in such a short period of time. But this is never advisable, because it could go aggressively against your direction. A few well-known fundamentals in the markets are NFP, FOMC, CPI, PPI, PMI. These fundamentals are usually occurring in the days of Mondays, Wednesdays, or Fridays. There are tools where you can check for fundamentals. These tools are myforex.com, Forex Factory, and there are so much more out there, but these two are basically the GOATs and the champions. After the first 4 requirements has been satisfied, the next thing and the last and final thing I have for you guys today is trading with the trend. A trend is basically the direction a market appears to be heading to. There are usually 3 types of trend in the forex trading market, which are the uptrend, the downtrend and the ranging trend. Specifically myself, I tend to avoid ranging markets, which are usually sideways, because they tend to not offer a clear direction where the market is heading to. So it is always advised that you trade with a trend. For a bullish trend or an uptrend, you buy for a bullish trend. For a bearish or a downtrend, you sell for it. Though this may sound simple, it is usually very hard for most beginner traders to be patient enough for each of these trends to provide setups which will lead them into the direction that they are trading. And with that comes the end of today's video. On my next video, I'm going to be recommending you guys all the tools you need as a beginner Forex trader. If you don't want to miss out on that video, ensure you hit the like button, also subscribe to the channel and turn on post notifications so that you can be notified whenever I upload that video. With that being said, I hope you guys have a lovely and an amazing day. Goodbye, everybody.